Bitcoin stagnation phase could last for 2 months. Following the recent surge in activity around the Bitcoin halving, the cryptocurrency is likely entering a stabilization period that could last up to 2 months, according to experts at Bitfinex. In their latest report, Bitfinex claims that Bitcoin will continue to set the tone for the entire cryptocurrency market throughout May and remain a crucial indicator of the sector's overall market capitalization. Bitfinex analysts highlight that, unlike in previous market cycles, consumers and businesses are now better informed about the economic fundamentals impacting market trends. This knowledge could lead to a 1 to 2 month consolidation phase for BTC, during which prices could fluctuate by as much as $10,000 in either direction. The expected stagnation follows a peak in Bitcoin's market dominance, which appears to be waning as liquidity shifts towards altcoins. This shift is attributed to the halving event, which historically heightens investors' risk appetite and redirects their focus towards altcoins. Here's what Bitfinex analysts have written. The 57% level on the BTC.D index represents a significant technical and psychological benchmark, based on historical data. Once Bitcoin's dominance hits this level, a sharp rebound usually occurs, signaling a change in market sentiment and a capital flow from Bitcoin to altcoins. After the halving last week, we observed BTC.D reaching 57%, followed by a sharp decline. Furthermore, market participants are closely monitoring Bitcoin derivatives. The recent decrease in implied volatility suggests a quieter summer for BTC. Summer is typically characterized by low volatility, and traders are starting to position themselves accordingly based on their preferences, commented Jag Kuhner, head of derivatives at Bitfinex. As the market adjusts to the halving and economic signals, investors are advised to keep a close watch on developments. It's important to monitor all changes in liquidity and market sentiment, which could further influence the currency dynamics. Billions of SHIB tokens accidentally burned in Shiba Inu network. In a bizarre turn of events this April, approximately 1.69 billion SHIB tokens were burned in the Shiba Inu network across 204 different transactions. The significant reduction in the available supply of the popular meme coin was not the result of strategic market maneuvers but rather accidental transfers. Representatives from ShibBurn explained that the spike in token burns primarily occurred because users mistakenly sent SHIB to a contract address. This is not due to any major news or anything else as some have suggested. People simply make mistakes, sending tokens to the CA and losing their investments. Be careful and double-check where you're sending your tokens to avoid such mishaps, the ShibBurn account reported. Meanwhile, technical analysis reveals potential signs of growth for Shiba Inu. The formation of a bullish flag on the daily SHIB chart suggests a possible upward trajectory in price. A potential bullish breakthrough at resistance levels of $0.000023 and $0.000025 could propel the coin from current support levels to $0.000071. However, the recent drop tempers the broader outlook for SHIB's prospects. The meme coin's price has fallen 60% from this year's high, dipping below the 50-day exponential moving average and finding support only at the 100-day EMA. The Relative Strength Index, RSI, and other indicators strengthen the bearish forecast, indicating that the path to recovery could be fraught with difficulties. In the current volatile market conditions, the next critical support for the token is at $0.000018. A break below this point could trigger further declines, potentially down to $0.000010. Solana-based meme coins buck the trend with double-digit rallies. In recent times, meme coins based on the Solana blockchain have shown remarkable growth, even as many leading cryptocurrencies, including Bitcoin, suffer significant losses. The meme coin segment is faring much better than other cryptocurrencies, prompting hopes within the crypto community that meme coins might lead a new bullish run. Dogwafat, the largest meme coin by market capitalization on the Solana blockchain, has risen by 16.2% in the last 24 hours. Other notable rallies include Popcat at 27.6%, GeoBoden at 36%, Slurf at 14.2%, When at 17.6%, and Moneki at 16%. These gains stand in stark contrast to the broader cryptocurrency market, which shows more modest dynamics. After falling below $57,000, Bitcoin has only slightly recovered and is currently trading around $59,000. Meanwhile, the market capitalization of the Solana-based meme coin sector has increased by 6.8%, now valued at $6.9 billion. The analytics platform Cryptonary commented on the current market enthusiasm for meme coins. If your coins haven't risen by at least 500% since the start of this year or by double digits today, you've chosen the wrong coins. The meme coin supercycle is in full swing, Cryptonary wrote. However, this market segment is not without its pitfalls. A recent investigation by crypto sleuth ZachXBT revealed that 12 projects involving Solana-based meme coins had been abandoned, costing investors a total of $26.7 million. For instance, the project I Like This Coin, attracted about $7.8 million from investors before its value plummeted by more than 50%. Earlier this week, another incident involved the coin BONKKLLR, which reached a market capitalization of $327 trillion, surpassing the GDP of any country. However, it turned out to be a honeypot scam, where money invested in the asset became trapped by fraudsters. Consequently, a freeze authority function prevented holders from selling their tokens. These stories serve as a stark reminder of the fine line between high returns and high risks. Investors are always advised to conduct thorough due diligence on projects and remain cautious due to the volatile nature of these digital assets. Aave DeFi Protocol unveils updated roadmap. One of the largest decentralized finance, DeFi, protocols, Aave, has presented its updated roadmap, announcing a significant ecosystem upgrade scheduled for mid-2025. The roadmap includes the launch of Aave v4, featuring a new interface and expanded DeFi capabilities. Aave v4 will be built on a new architecture with a unified liquidity layer. This will create a centralized system for managing all assets and loan operations on the platform, extending the concept of portals from Aave v3. This innovation will allow the decentralized autonomous organization of Aave to add new loan modules or remove outdated ones in the future without having to move or migrate existing liquidity. Additional features of Aave v4 include fully automated interest rates that will adjust to market changes using Chainlink data oracles, liquidity incentives that aim to more accurately manage risks and enhance the capital efficiency of the protocol by offering lower rates to borrowers with secure collateral. The updated Aave roadmap also introduces several new functionalities for integrating the GHO with Aave v4, expected to improve the user interface and increase yields for providers of the algorithmic stablecoin. The stablecoin GHO, launched in July 2023, is backed by Ethereum and relies on the Ethereum Facilitator smart contract system, which allows for collateral to be deposited and loans to be issued in GHO. As part of the rollout back to v4, the project's stablecoin will see the following enhancements: a softer liquidation mechanism that will operate through an automated market maker, AMM, simplifying the process of liquidating positions in GHO by allowing users to choose which collateral to liquidate and which to buy back. Interest payments in stablecoin. Liquidity providers will be able to opt to receive interest payouts in GHO instead of the initially deposited stablecoin. Interest from borrowers will be converted into protocol-controlled value, PCV, which directly supports the issued GHO. An emergency redemption mechanism that will be activated in cases of serious and prolonged deviations of the GHO rate from parity, allowing for the gradual redemption of the least healthy collaterals. Cost optimization for gas. Thanks to the new architecture and the removal of outdated features, transaction cost expenditures are expected to decrease by 30 to 50%. Currently, the proposal to upgrade Aave to v4 is in the temperature check phase, reflecting the community's sentiments. Only after this stage will the initiative move to the voting phase. Aave is currently the third largest DeFi protocol in the crypto market. According to DeFi Llama, its total value locked, TVL, is estimated at $10 billion.